Welcome back into Eye on Agriculture. I'm Brityne Rucker. A lot has happened in the legal and tax world over the last couple of weeks, and agriculture is in the crosshairs of much of it over the long term. We are speaking with the man to break it down for us. We are with Roger McEowen, author and professor of agricultural law at Washburn University. Roger, as always, welcome.
Good to be with you, Brityne.
All right, Roger, let's break this down. What is in the Inflation Reduction Bill in a nutshell?
In a nutshell. Well, that's a really good question. This bill is actually about as far away from genuine inflation reduction as a piece of legislation as is possible. From an economic standpoint, it'll likely increase long-term inflation and depress household incomes and produce the long-term deficits that fuel long-term inflation. In fact, the Joint Committee on Taxation estimates that all income tax brackets up and down the tax-paying scale will face a tax increase. From a broader perspective, it's got a bunch of so-called clean energy provisions in it. That's probably the real purpose of the legislation.
So, Roger, what are some tax provisions of the act?
Well, it's got a 15% minimum tax on corporate book income rather than taxable income that applies to C corporation as annual adjusted financial statement income that averages over $1 billion in revenue over the prior 3 years. Now that sounds like a lot, but those are the major corporations that employ people on a significant scale in this country. So it's a tax increase for them that's going to filter down through employees, wage employees, and then product prices. The provision, the bill also, this same provision, also disallows the use of net operating losses that were accruing before 2020. Well, in 18 and 19, for example, they probably had invested in equipment that created a tax loss on the return that they're carrying forward. Now those get disallowed, and so that's a problem. There's also a non-deductible 1% tax on stock buybacks of a covered corporation. That's a domestic corporation that has stock traded on what's known as an established securities market. There's an excess business loss rule that's going to impact agriculture. That was set to expire after 2026. They've now kept that cap in for 2 more years. So what that means is that there's going to be a cap on net operating losses well, it's currently $540,000. Very filing joint return. So if you have a big net operating loss, and we can use Section 179 depreciation in agriculture to create
Roger,
that's going to get capped.
The act actually contains a great deal of impact to the ag industry. What do people need to know about?
Well, it's got a bunch of funding in it that normally we would see in a farm bill, and it's thrown in this one. So it's such things as EQIP and CSP and ag conservation easements and rural development and drought relief and national forest system funding. That's all thrown in this bill, which makes me wonder, well, what's the next farm bill actually going to look like?
It'll be interesting. Well, Roger, thanks so much for coming on and chatting with me today. Everyone stick around. On Ag will be back after the break.